November 22nd, 1910. A private railroad car slips through the darkness toward Jekyll Island, carrying 6 men who collectively control 1/4 of the world's wealth. They travel under false names. Their servants are sworn to secrecy. The press has been told nothing. When they arrive at the millionaire's hunting lodge on a remote Georgia island, they will spend the next 9 days crafting the most powerful financial institution in American history. They call it the Federal Reserve System. The public will be told it protects them from economic chaos. The truth is more complicated. This is another video where money, power, and history collide, and nothing is ever as simple as it looks. The story America learned goes like this. In 1907, a devastating financial panic nearly destroyed the economy. Banks collapsed. Millions lost their savings. J.P. Morgan himself had to step in as a one-man central bank, using his personal fortune to prevent total catastrophe. The crisis exposed a dangerous truth. America's banking system was primitive, chaotic, and vulnerable. Congress responded by creating the Federal Reserve in 1913, a quasi-governmental institution designed to stabilize the currency, regulate banks, and prevent future panics. It was sold as a populist reform, wresting control of money from Wall Street titans and placing it in the hands of government appointees answerable to the people. The Federal Reserve would be America's shield against the greed and speculation of private bankers. At least, that's what they said. The real story begins with those 6 men on Jekyll Island. Nelson Aldrich, the powerful Republican senator whose daughter would marry John D. Rockefeller Jr. Henry Davison, J.P. Morgan's right-hand man. Frank Vanderlip, president of National City Bank. Charles Norton from First National Bank. Benjamin Strong, representing the House of Morgan. And Paul Warburg, the German-born banker who had studied European central banking systems for years. They didn't come to Jekyll Island to save America from Wall Street. They came because they were Wall Street. The 1907 panic had revealed an uncomfortable reality. When crisis struck, the biggest banks didn't suffer, they profited. Morgan had used the chaos to acquire competitors at fire sale prices, consolidating his empire, while smaller banks burned. The panic proved that a handful of financiers already controlled America's money supply. They just did it inefficiently. The solution wasn't to break up this power. It was to formalize it. Warburg had spent years studying the Bank of England and the German Reichsbank. He understood what his American colleagues were only beginning to grasp. Central banks didn't limit the power of private bankers, they amplified it. They provided a legal framework for the very control Morgan had exercised illegally in 1907. The Jekyll Island meeting was like letting burglars design the security system. For 9 days, the financiers crafted their masterpiece. They would create a central bank, but call it a Federal Reserve System to avoid the stigma. They would divide it into regional branches to appear decentralized, while ensuring that the New York Fed, which they would control, held most of the power. They would staff it with government appointees, but ensure those appointees came from their own ranks. Most brilliantly, they would give their new institution the power to create money from nothing. When member banks needed cash, the Fed would simply print it, backed by government bonds. The banks would profit from the loans. The Fed would profit from the interest. The government would pay the bill. It was the perfect crime, dressed up as public service. Warburg wrote the original draft. Aldrich introduced it to Congress as the Aldrich Plan. When Democrats balked at its obvious Wall Street origins, the bankers simply found new sponsors. Carter Glass and Robert Owen, progressive Democrats, introduced virtually the same plan under a new name. They added cosmetic changes, enough to claim victory over the money trust, while delivering exactly what the money trust wanted. The Federal Reserve Act passed on December 23, 1913, when most of Congress had already left for Christmas. President Wilson signed it into law that same day. "I have accomplished the great work of my life," he declared. Years later, Wilson would change his tune. "I am a most unhappy man," he wrote. "I have unwittingly ruined my country." He had begun to understand what he had signed. The new system worked exactly as designed. When World War I erupted, the Federal Reserve pumped millions into the economy, financing America's entry into the conflict. The war that killed millions made the bankers billions. The Fed's easy money policies created the Roaring Twenties bubble, which burst spectacularly in 1929. The Great Depression that followed wasn't a failure of the Federal Reserve. It was proof of its success. The same men who had orchestrated the 1907 panic had now institutionalized their power to create booms and busts at will. They controlled the money supply, and therefore controlled the economy. Benjamin Strong, the Morgan man who became the Fed's first governor, put it simply: "I can make credit so cheap that people will have to borrow, or so expensive that they cannot borrow." The Federal Reserve had transformed a conspiracy into a constitutional right. The names have changed, but the behavior hasn't. Today's Federal Reserve operates on the same principles established at Jekyll Island. A small group of bankers, now called the Federal Open Market Committee, meets in secret to decide the fate of the global economy. They create trillions of dollars with keystrokes, inflating asset bubbles that benefit those who own assets while impoverishing those who don't. When crisis strikes, the pattern repeats. In 2008, the Fed created $4 trillion to bail out the same banks that caused the crisis. In 2020, they created another $3 trillion, claiming it was for pandemic relief while most of the money flowed to Wall Street. The biggest banks are now bigger than ever, their profits guaranteed by an institution supposedly designed to regulate them. The Federal Reserve's own data reveals the truth. Since 1913, the dollar has lost 96% of its value. Real wages have stagnated for decades while asset prices soar. Wealth inequality has reached levels not seen since the Gilded Age. The central bank created to serve the people has systematically transferred their wealth to the financial elite. The system works perfectly, just not for whom you think. The men who met at Jekyll Island understood something most Americans still don't. Money is not wealth, it's control. The power to create money is the power to determine who wins and who loses, which industries thrive and which die, which nations rise and which fall. They didn't steal this power. They convinced us to give it to them. They wrapped their private interests in the flag of public service, sold their monopoly as competition, and presented their control as our protection. The greatest heist in history was committed with a pen, not a gun. The Federal Reserve stands as proof of a darker truth about power. It's not taken by force, it's granted by faith. The people who control the world's money don't need to break the rules. They just need to write them.